Hey guys, this is Andrew for TRENDLINES.com. So very quickly, let me introduce myself because this is YouTube, this is how it's working. I'm a professional trader and I've just started to make YouTube videos where I basically try to talk about everything I know, everything I see at work, all the different tools and techniques that I use to make money on the markets. So in today's video, I want to make an update on AMC. Let's get into it. All right, guys, so this is AMC chart. Let's start on the 4-hour time frame and let's see what we can find. I have actually some new information to give you. What I was actually expecting, which is basically here, we moved up, from February to March strongly with a beautiful 1, 2, 3, 4, 5. Then we corrected with an ABC, and I was expecting a third wave, just like for GameStop. And the third wave is not coming, guys. This is a fact. We cannot ignore it. So we need to adapt and we need to understand what is happening. And it's actually those two stocks, they move together. I do very regular updates on those two. And usually when something is true for one, it's true for the other one. And here, guys, I was telling you about this WXY correction many times. For those who have watched my video, you know that this was a scenario I had in mind. It was not my preferred scenario because I was seeing some, bullishness coming. I was seeing that we had some nice breakout. We had some nice breakout here, guys. On the 14th of April, I gave you this breakout. We had here a beautiful bullish development. And then, we have this bearish week, guys, that, is almost ending. You're going to see. I'm probably going to have 1 day delay on this video because I posted GameStop yesterday and I actually did those two videos on the same day. So as you can see, guys, we are just check here, guys. So you know that I'm telling you the truth. We are here. I'm using the 5th of May closing level. And we are, for me, you can see here, we are the 6th of May. So whatever. Here, what is happening, guys, is that actually we're having this sideways correction. This is a complex correction, and I'm going to explain, like I did for GameStop, how you can actually go towards this kind of conclusion before it is finished. Because once it's finished, it is useless to actually say, oh, in the past we had this complex correction that went sideways. When something is messy, this is not messy. 1, 2, 3, 4, 5. This is beautiful. This is the very clean counting. So when you have something that is clean, that is going up, with all the indicators going together, MACD going up, volumes picking up, this is giving you the trend. The trend is bullish. Then we're having this correction, ABC. For now, it is still clean, all right, at this time. So I was kind of convinced that we are having here the third wave, but the move down that we had here is telling me that something else is happening and I don't know what. So you need to accept that there is something that is playing at that is not very clear. And usually when this is the case, when you don't know what is happening, when you cannot do a clean counting, when everything is not going towards the same direction, it is usually a complex correction. So you go towards the double threes, the triple threes, the WXY, the WXYZ. This is, something that you find here in Elliott. This is Elliott Wave book. You can find it on the internet. You just type Elliott Wave Principle, Pressure and Frost. And double and triple threes. I'm not going to read this again like I did for GameStop, but go check my video on GameStop, guys. I went through this into details and it's just explaining to you how this is working. All right, so I'm going to explain this as well in a new training that I'm going to do soon, giving you clear examples. But basically what we're having is something like this, WXY, WXY, it can be ABCs, it can be triangle, whatever. And this here is, to me, what is playing out. And the only rule that it needs to respect is that it is moving sideways and using the classic corrective patterns. Let's see if we can find it. ABC, easy. Here, ABC going higher. And now we just did the A wave, guys. So the A wave is about to stop. As you can see here, we're having, and let's go on the hourly time frame. We're having some consolidation. All right, this is a consolidation going lower, higher, lower. So this is consolidating around the 9 level. Let's see if this was predictable. As usual, guys, bam. And you see right on it, tag, support. So here we're having a support level. Definitely this is now resistance. This is our major resistance level. This is what we want to break to finish the A wave. All right, the A wave is going to be finished when we're going to break the orange line here on the hourly time frame. So basically when we're going to trade above say 950. When AMC is going to trade above 950, we're going to have something like this, and then probably go lower, because then we would have completed the complex correction that is happening right now. So let's analyze a bit what happened here at this level, and if this was actually possible to find. Why did we actually rebound here? The same reason why we rebounded at 980, but actually 980 didn't hold at all. It was just little bit rebound, then we blew right through it, then we come back, rejected, and we go lower. All right, so 980 has not hold long. Now we are at the 9. As you can see, guys, this is working for a long time, this level. So here it's the lowest level, then here you can see we have some resistance. We break it, we retest. So this is a major level now that is acting as support once, twice, 3, 4, 5, 6, 7, 8, 9, 10. All right, in the very recent past it acted 10 times as support or resistance on the hourly time frame. So this is our strong support, and I'm expecting it to hold, and once again I'm looking for this kind of development. Then we're probably going to do the B wave and the C wave, and this would have complete our WXY complex corrective pattern, and then we're going to probably be ready to move for the third wave. Very quickly, let me give you a bit more information. So what do we have on the option market? So the option market, as usual, guys, you know what I do. I take all the options that I can find on Yahoo Finance. I just, store it here, and I do my charts. I compute, all the synthetic short using the delta formula that is here. It's always the same thing, guys. It's this formula, and the delta is actually, it's this formula, guys, as you can see. So it is not that complicated to do. It looks like a bit long, but it's actually quite simple. So you guys can do it as well if you want. It's quite easy. And once you get the delta, so first you need to get the volatility that you can find on Yahoo Finance. Then you have the delta, and then you can compute the synthetic short interest associated to each call option. Once you get this, you can compute the total synthetic short. That is just the sum of the synthetic short by strike. And here, what you can see, now I go on the September maturity because I think that it's more stable, and I'm going to monitor this volatility. For now, it's 164%, which is very high, of course, for the strike call. And the delta for the September maturity, the delta is 29%, guys. So there is 30% chance that AMC trades above 40 in September. So this is, the information that is given to you by the option market. This is not my view. This is the reality. There is a probability. It's like when bookmakers, give you an odd, you can say that it's a probability. For example, if it's like, 50-50, the fight or the match you're going to watch is going to be very even. Here we have 30% chance given by the bookmakers that are option marketers actually, that is 30% of AMC trading above 40 in September. So it's a lot, guys. All right. You need to accept that, this is big, and this is one of the reasons why I am so bullish. I'm just reading the information contained here. Let's have a quick look at the short interest information. So the synthetic short is back to 5% on AMC. It was 6, but as you can see, guys, we went lower. We are not at 10 anymore. We are at 9. So it's even 4%, guys, now. So here I update my data. Now it is 4%, as you can see here. And so the DTC 1 month using the monthly volume is 2.3, and the DTC 1 week using the weekly volume is much higher because the volume is very low. So this is also one information that we are in a corrective pattern. And 3.7 is actually quite high, guys. We're getting hot here. So we're getting hot for two reasons, because hedge funds are selling more. You can see that in the last 2 weeks, they sold 20 million more shares on the market. So the short interest is 23%. I add on top of that my synthetic short, and we're having 27% total short interest, which is a lot. So it's going to take in average almost 4 days to cover if they want to cut their position. So they're going to start thinking about it if AMC goes higher. So once again, we need to be in the third wave, which is going to come before all this data would actually enter into game and create this bullish momentum we are waiting for. So guys, that's it for me. I hope you enjoyed this video, and if you did, please don't forget to click on the sub, like and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I see you guys.